Trump is putting a lot of pressure on Jerome Powell to lower interest rates. And that's a big deal. Whether you realise it or not, that whatever the decision is in terms of rates from the Fed can subtract or add thousands to your portfolio. And over the next year, rate cuts are, in my opinion, likely to happen. So let's break down exactly what it means for your money. What the Fed do in simple terms is, they manage the monetary supply or manage interest rates within the economy. An example would be rising rates makes borrowing more expensive, that cools inflation, cutting rates makes money cheaper, and that boosts growth. That's in simple terms. Here's how it touches stocks, bonds, real estate, and even alternatives. If there's a rate hike, i.e. a rise in interest rates, borrowing costs will go up, corporate profits will shrink, and growth stocks take a hit more than others, I would say. Especially if they are vulnerable. Now, a cut in rates means cheaper money, risk appetite returns, and growth stocks rally. We're in pretty interesting times now because, as you'll have noticed, we're seeing markets at all-time highs. What would be the tip to that? Don't panic sell. Sectors like energy, consumer staples, dividend payments often do better when rates rise. Now, the impact on bonds, when rates go up, again, a hike, bond prices fall, yields rise, short-term bonds become more attractive. When the rates cut, i.e. go down, bond yields fall in price and long-term bonds will benefit more. What would be the practical takeaway from that? Duration matters, so you've got to position yourself accordingly. The impact on real estate is quite profound and for obvious reasons. With a hike, mortgage rates climb, housing demand slows, and it puts REITs under pressure. REITs are real estate investment trusts. These are basically, funds that are invested in various areas of real estate, whether that be a real estate investment trust that's focused on, commercial property, like residential property, or, even things like healthcare, etc., etc. And in terms of leverage, when rates go up, debt-heavy investors are much more exposed, particularly if they don't have a lot of equity within their portfolio. And that brings me on to alternatives. Alternatives can be many things, like gold, commodities. Hikes, stronger dollar can suppress gold. If rates go up, the dollar becomes stronger. And, a cut, dollar weakens, gold, commodities, and real assets, multiple other assets can benefit. Crypto. Okay, this is an interesting one. Crypto often rallies when liquidity is cheap. So if there are rumors of, rates being cut, crypto will tend to respond very favorably to that. Now, when it comes down to investor mindset and strategy, the best thing I could say is don't panic, don't overreact. Policy shifts can take months to filter through. Markets tend to price information in what they expect the information is going to be. So with that, rising rates play tilt defensive, go more towards cash flow assets. Falling rate play, lean into growth stocks and real estate. So as always, diversification is really key with this. So at the end, just to wrap up, I would say Fed moves ripple across every asset class. None are immune to it. Stocks, bonds, real estates, alternatives. The key is knowing how to position, not how to predict. And to just finish off the video, the key points I would summarize is, if we look at stocks, hikes hurt growth, cuts fuel rallies. Bonds, hikes boost yield short term, cut boost prices long term. Real estate, hikes higher mortgage, slower growth, cuts cheaper borrowing. Alternatives, hikes strengthen and pressure gold, cuts weaken and boost real assets. And to just finish up, I guess it's don't chase, position with balance. And obviously the Federal Reserve is meant to be politically independent. They are feeling a lot of pressure at the moment. How they're going to react, no one knows. We've seen in the news, even the recent renovations that happened to the Federal Reserve building, which is a very, very old building, and I'm sure these, repairs were needed. But apparently there was asbestos that needed removed, and they have went over budget, but that feels like it's become political fodder. So, that's it for today on that. If you want more content like this, hit the follow, hit the subscribe, Expat Money Chat. If you have any questions, drop us an email, info@expatmoneychat, or leave a comment in the comments section. Thanks for watching, much appreciated, and thank you.